Hi, this is Seema Arora, and this is a podcast on sustainability, climate, business, economy, and tech. In today's podcast, I'm going to focus on Anthropic and the role ESG has played in driving its exponential growth in valuation. That's right, ESG, an investing strategy that goes beyond fiduciary responsibility to shareholders and instead also considers a company's larger impact on environmental, social, and governance dimensions. It has been argued by some that ESG investing principle compromises short-term and long-term profits. And in fact, in the last few years, the term has fallen out of favor as detrimental to shareholder value. This view of investing has incurred the wrath of critics who cite Milton Friedman's view of investing for shareholder value. However, that view has been challenged, and in fact, Anthropic has emerged as one of the frontrunners playing a pure ESG play. Anthropic's exponential rise in valuation terms has been driven by ESG, and let's see how that is the case. So, just a very short introduction back into the term of ESG. ESG is a comprehensive term that encompasses three very distinct pillars: environment, social, and governance issues clubbed together all as one, and determining, so to say, a company's social impact. So here, in this case, the case study of Anthropic that I propose today, I want to focus on the governance aspect, the G of the ESG. Let's first look at how Anthropic has had a rise in valuation. In its most recent round of funding, it raised about $65 billion in Series H funding, which gives it a post-money valuation of $965 billion, almost $1 trillion. On June 1st, it has filed an S form with the SEC indicating its intent to file for an IPO, and we can see that coming very soon this year. Now, one of the reasons for this explosion in growth, of course, is the exponential growth, as Dario talks about, of the models, but the exponential growth in valuation is certainly being driven by Anthropic's strategic and proactive ESG. Anthropic is actually following a playbook on positive and proactive ESG. Let me go through this for Anthropic and keeping in mind the G aspect of ESG. So Anthropic is using the governance aspect as a tool for strategic differentiation and value creation rather than just a compliance checkbox. Now, what does that really mean? Historically, when we look at the governance aspects of a company, we attribute that to the corporate governance side of the company. The financial oversight, in this case, compliance with the laws of the SEC protecting shareholder interests, avoiding conflicts of interest of executives, compensation, and those kind of issues. In this case, we're talking of governance of its core product offering, which is AI. And as we know, the AI race has turned into a battleground of trust. Follow with me here. So if you look at Anthropic and we discuss the economic reasoning behind this, again, this surge in valuation is that this happened soon after its feud with the Department of Defense. Now, the backdrop is we have virtually zero formal federal regulations that are guiding AI safety currently. In fact, the thrust is that AI safety can, in fact, wait. But Anthropic has taken a more responsible stance in the development of AI, and it has executed a strategy that I call an over-compliance strategy. And this is some papers that I've written previously with respect to environment. So the strategy is this: in the face of minimum regulations, it has taken a stand that is far ahead of its competitors. And therefore, it has differentiated its AI offering on the basis of its adherence to safety and guardrails in the creation of AI. Instead of chasing short-term government revenue at all costs, Anthropic has voluntarily overcomplied by drawing strict self-imposed boundaries in the development of AI. Anthropic's stance with the Department of Defense illustrated this strategy, establishing clearly that in the case of autonomous weapons, Anthropic would establish a firm red line on the usage of their models and sparking a very high stakes feud with the Department of Defense. Anthropic also drew a red line in its use of cloud models when it took a firm stand and forbid the Department of Defense, or did not allow the Department of Defense its usage of cloud models for mass surveillance of US citizens. Now, by establishing these guardrails and taking the Department of Defense head on, it established that it was willing to go beyond its responsibility to a next level, and that it was willing to stand up for its values of having a safe AI. The Department of Defense then, of course, went further with this and labeled them as a critical supply chain risk, a term referred to really bad actors whose interests are not aligned with the US government. Now, this feud is ongoing, but according to Daniela, the company is trying to work and having a productive relationship with the Department of Defense. The story is not over yet, but what did it do for Anthropic? Let's see that. So, as soon as Dario made these statements, Claude became the top app on iPhone. Daily sign-ups surged to more than 1 million a day for the next 3 to 4 days, and customers who had not even heard of Anthropic began to download this app. So Claude mobile app became the #1 app on iPhone, and people thought this is an AI that people could trust. Paid subscribers surged, as well as daily active users of AI, but free users also downloaded the app. Dario became very quickly identified as the most trusted executive in AI, and deeper partnerships followed with companies in the supply chain. So be it Nvidia, Google, Amazon, SpaceX, everyone was in with Anthropic as kind of a trusted partner. Now, this was not just a one-time event. Anthropic has, when it released its Mythos model and discovered vulnerabilities, and so while it was clear that there were vulnerabilities and potential for hacking by bad actors, they released the models in a deliberate way to the responsible parties in order to mitigate those risks. So these risks could have been in operating systems, software systems, banking systems, and Anthropic made these available to these companies that were being affected by it so that they could address these vulnerabilities. Again, a very responsible way of addressing AI and kind of taking it on themselves to be safe. So Anthropic has been very clear about acknowledging systemic risks of these models, and at the same time they have addressed the larger public good, which is AI safety. Now, critics would have thought that this would stifle its growth as a company or stall its growth. And nearing an IPO, in fact, what this strategy has done is, in fact, made Anthropic more valuable, more trusted. Companies that were terrified of OpenAI's shifting governance found Anthropic's a trustworthy partner, an AI that one could legally and ethically trust. Again, in the face of minimum regulations, Anthropic overcomplied and helped in setting a differentiated product, a product that companies could trust, and therefore, by large numbers, Anthropic won over many customers from the disgruntled OpenAI set of people for its shifting governance. In hordes, it gained traction when it put these red lines in place. So that was the Department of Defense story, the release of the Mythos with the vulnerabilities. But this is not the end. This will be ongoing, and this has been ongoing in very rapid way. And here's something to be said. So this is not just the kind of what Dario or any of the co-founders have advocated for. And this kind of a responsibility has been inherent in their financial structure. They have established Anthropic as a public benefit corporation, and that means that the long-term development of a safe AI is also their goal, in addition to shareholder profits. So they will pay heed every time to the safety of AI as well as shareholder profits. And the question is, will the shareholder profits be enhanced as a result of the safety, or will they be compromised? In their charter, so to say, the financial charter, they have identified that safety also will have priority. And this structure is very similar to Patagonia, whereby their stakeholder, and they say the major stakeholder is the earth. That's what they would prioritize in addition to their profits. So now the question is that does this ESG, very strong ESG, increase your profits or not? And we've seen evidence of that increase happening with the Department of Defense decision and the ability, the ease with which Anthropic then became the trustworthy AI. So we can say that their commitment to safe AI development has been good for governance, but great for its bottom line, as reflected in their impending IPO. So the next point that I want to make is that there are many things that are still happening at Anthropic. And, one of the questions that I was asked in a panel, the Dow Jones, was that, and this was in the context of the environment, does ESG generate alpha and mitigate risk? And the answer in this case is a resounding yes. And we have seen that evidence play out. The fact that it is a public benefit corporation, there's a lot more coming. Anthropic has donated $20 million to an NGO that will help recruit candidates who are in favor of a more restrictive AI development policy. So there's the politics side of it that is happening as well. Interestingly enough, and this is something that is worth a lot of thought, the pace at which Anthropic, and everything is happening with so much speed, the pace at which Anthropic is coming out with different ways in which it can influence policy is akin to none. So Anthropic has laid out a policy for the evaluation of AI. It is now arguing or calling for companies to disclose catastrophic risk. It is calling for transparency of the models. It is calling for all models and companies that are developing AI to declare the risks, be it cyber risk, bio risk, or any kind of risk that can be associated with AI. They want to develop a disclosure framework. And this is, again, very similar to how carbon was going to be disclosed in the scope 1, 2, and 3. And these were requirements that the SEC was going to pass. Anthropic is proposing a similar structure of disclosure by every AI company, as saying which is the safer model. Don't just believe us. Every company has to measure. And what is also more interesting is that this kind of a call for AI regulations, a call for the development of a stricter AI, a regulatory framework, has meant that it is in fact even suggesting which parts of the government already can take on these functions. And Dario has even recommended now as to the development of an AI regulatory agency with teeth, enforcement teeth. Now, this is just a lot for a company that is now arguing. So they've differentiated, but now this takes it a step further. And this is, again, following a very similar playbook that we have seen before. The idea of a regulatory capture. And that is, we are going to be better than the best, but now let's make this binding for all companies. We have identified the risks, we've identified everything, and that is what should go in the picture. So they're recommending advisory councils, they're recommending every regulatory intervention, and they have it all on paper and ready to go. Because the speed at which Anthropic is trying to influence regulations, well, it just calls for a pause. The point I really want to make here is that this is ESG play that has resulted in driving an exponential growth in the valuation, as Dario would say. And anyone who does not believe in an ESG strategy will be leaving a fortune on the table. Having said that, I do want to emphasize that imposing this entire regulatory infrastructure to everyone is worth a pause. With that in mind, this is Seema Arora signing off for now. Until next time. Thank you.